All right, good afternoon, everyone. Hope you're doing well. Thank you for tuning in to this live broadcast. I'm going to go over some tickers today and giving my kind of insight and views going into next week. Obviously, everyone knows next week is going to be pivotal for the market. I've never seen a week quite like this coming up. It seems like every week is a very different story and different movements all over the board. So I'm going to cover SPX, I'm going to cover SPY, I'm going to cover the Qs, and of course the big five earnings that's going to be happening next week. So let's just go ahead and go to the investing or the investing.com economic calendar going on for next week. As you know, the FOMC does begin to meet on Tuesday, July 26th. They will meet for 2 days and release their decision on Wednesday, 2 p.m. Eastern, what the final rates will, what the rate decision will be, followed by Powell, who will speak at 2:30 p.m. Eastern time regarding the current state of the Feds and inflation and all that. And we know that's going to be the big headline. So here's my view in regards to what might happen on Wednesday. I do think that the Feds will go ahead and do a 75 basis point hike for at least this month and going into September as well. Just remember, the FOMC does not meet in the month of August. They will meet again in September, but that does not but that doesn't mean that they won't raise rates again next month. It just simply means that, hey, 75 basis points. And I do think that the market will respond quite positively if the Feds do the 75 BPS. I think 100 basis points. The market is not currently pricing that in at this point. So if it's 100 basis points, I do think it's going to shock the market. Okay. So that's the big data going on for next Wednesday. Of course, on Thursday, if you're still haven't blown up your account, just kidding, it's going to be GDP. GDP's for Q2, the first estimate, and of course, jobless claims as well. And of course, Friday, once we head into Friday, it will be the PCE data that will be coming out, the core PCE month over month and year over year. Going into the earnings week, we have a very, very busy week of earnings. We have, number one, the ones that I'm most concerned about or looking into is, of course, Microsoft and Google Alphabet on Tuesday. Meta on Wednesday here. I'm probably not gonna touch Shopify. I don't think it's worth it at $30 a share. And it's an interesting decision. They decided to split their stock, not at $1,000, but at $300. Anyway, not my company. Amazon on Thursday and Apple at the same time on Thursday as well. And remember, you have GDP that day, and then you have FOMC on Meta Day, on the day of earnings for Meta is another big one. And Etsy might be one worth exploring as well. So I'm going to cover the big five in this session with you guys. All right, let's go start with the S&P 500 index. All right, so looking at the line charts here, as you can tell, this is going to be a big area here. The one thing that I will point out about this chart is you got to look at VIX in comparison with the S&P. The VIX, as you know, is the volatility index for the S&P 500. Okay, remember when we started to top out back in late May and early June, around the $4,100 level, it started kind of dancing around and consolidating here, and we saw the market literally traded within ranges during this time. And during this time, you saw VIX literally at these levels. It went from the highs around here, about 32, all the way down to, dropped about 28%, okay, in a matter of 2 weeks, down to the bottom here at about 24 or so. So here we go. Once again, the cycle is kind of repeating itself. We went from VIX at the top of, at the lows around this range here, from about 35 all the way down to 22 at this point. So the VIX is literally 35% off the highs since this particular run has started. So this is a big warning. Okay, I know a lot of folks out there do not believe in VIX, do not believe that there's that correlation. Some folks even believe that, hey, I mean, you don't need to have a 45 VIX in order for the bear market to be over. And I'm going to I'm going to go against that theory because, I mean, yes, while the price action has been very hot, the market is moving on low volume as well. Now, we do obviously see a lot of moving averages on this chart here. You see a lot of these color lines. these are my simple moving averages on a daily, and we're starting to see that curl here so far. All right, over the last couple of sessions here. So the market is responding positive, fairly well, despite bad news from Apple slowing down hiring. Same thing with Google and also I believe Microsoft also announced hiring freezes going or slowing down hiring in the next several quarters, or at least the foreseeable future, right? So while we do have great good data so far, it seems so far the market's turning up. It seems so far, that this run feels a little bit different from this run. We're not there yet. I can't make a call whether or not the bottom is in or we're going to make a new low, but we're going to go day by day, especially with the week coming up where it's going to be so volatile. But I think the best thing to do is to buy some VIX if it hits 20. If VIX hits 20, I think I'm going to buy a lot of calls, okay? Because, with the GDP data, with the FOMC, with Powell, things are going to get crazy this week, okay? I think one of the things that we can defer or infer regarding this chart is that your longer moving averages are still on a downward slope, okay? While the short ones are moving up, it doesn't give us great confidence to say that the markets are just going to are flipping around and we're putting on the bull horns quite yet. All right, so that's SPX. Let's go ahead and I'm going to jump over back to my candle charts here. Give me a quick second and we'll take a look at the Qs and some of the short-term things, short-term price targets that I'm looking at. Now, by the way, since we are here on a candle chart, I have my 34 EMA, 915 EMA, all clouds, all on this chart. Now, the S&P 5 nearly filled the gap here at the 40.15 level. It actually didn't do it. Neither SPY did. So let's go ahead and take a look at SPY and what we're looking at for this coming week. Okay, so SPY, obviously there is that gap that needs to fill at about the 401 level. It hit literally 400, I think, on Friday, I believe so, right on the 400, but it's not quite filled yet. There's heavy rejection. And as you go up into these price levels, you're starting to see the volume by price. There's going to be supply coming in. Now, so far, there's going to be there's that demand zone right here at the 390, 388 level. So you're going to see some support here going into this following Monday. Now, on Monday, I wouldn't be quite a bear yet. Okay, there's clearly a lot of support. There's clearly a lot of buyers at these levels based on the volume by price. Now, of course, if the SPY does lose a 395 down to 391 level, there's some demand area at the 380, but I don't think that's going to happen. At some point, I do think that this gap right here may fill at some point. It could be. Here's a scenario that I see. If, let's say, for example, Feds come in with 100 BPS, okay, that gap will fill pretty quickly. But I also think if that gap fills, you'll see the market reverse as well, because it's quite interesting, the dynamic of whether the market is pricing 75 or 100. Remember, when CPI data came out, it was projected on that day and a couple days following that there's a 70% chance, based on CME data, 70% chance that the Feds are going to do a 100 BPS. Since then, that data or that CME data is down to about 20 or I think 15, 20%. And that's because Bullard said that they were not looking at 100 basis point quite yet. Okay, so that insinuated, of course, that the market and the FOMC is not looking at that much of a drastic action. So therefore, from that CPI day, all right, when it was released, the markets actually turned back up. Okay, yes, we dropped here, and the Fed say, wait a minute, we're not doing 100 basis points, and the markets have been running ever since. Now the market is pricing in at this point. Okay, about 75 basis point. If they actually do 75 basis points, I think that you will see the market run up. If it's 100, I do think it will. That 380 gap is going to fill, and we'll have to go from there to see if how the market wants to respond. Because so far, all the bad news lately at least in the prior week with Google, Amazon, and slowing the hiring, and even a case of polio, the market didn't care and it just continued to go, especially, but obviously Friday we saw a little bit of pullback. So going into this week, you have a 394 to about 390 support. Again, this is a demand zone here. I would be careful in this area. If you are trying to short the market, I wouldn't do it unless you saw significant downtrend or strength on the downside. Same thing with the Qs, all right, which follows the NASDAQ. All right, you have 298 support down to about 294 support. And again, right here in this area, you do have a lot of demand. All right, of course, as we go up, there's a big time supply zone at the 340 levels. But I mean, I think that could take months down the road. I don't even consider that as a possibility just yet. So we'll have to see if on Monday the 300 level supports holds. If it doesn't, quickly you will see the price action coming back into the 3450 cloud. And also, one thing to note that's a little bit different this time regarding this run is that it looks more like this run here. Okay, you have the 9 and 15 3450 clouds crossing versus here you never even got that chance to. It didn't even touch. Okay, but we're touching here. All right, so one side of me says that, hey, this is a very different run than prior bear market rallies. Okay, one thing I will say too regarding this rally is that our stochastics and CCI is actually not looking very good if you're a bull. Number one, it's completely overbought and it's starting to curl down. Very similarly to this situation back here in the May and June timeframe. In addition to that, if you look at the CCI during this run up here, it started to move down. All right, so you have what? A bearish divergence. Okay, now this between this high and this high, so far we're a lower high. All right, and you have higher high on the CCI. Okay, so this is not looking good. This is some type of, obviously, this is a bearish divergence here. All right, CCI running up, but the price action is slowing down here. So this is what, you should be very cautious of. Either you don't want to short it when the markets are down too much on the intraday, and you definitely don't want to chase calls should there be a little pump fake on Monday. All right, because I don't think anything's going to necessarily move on Monday, not until at least we see Microsoft and Google earnings. So with that being said, let's check out Google, which I am quite bullish about Google. All right, Google is, it's been consolidating within this area between May and also between May and now. Okay, we're literally right between 104 to up to 120. I want to look for a dip on Monday to grab some calls. I do think that there is significant evidence so far that their ad revenue should still be okay. YouTube, etc. And quite frankly, the CCI is very much oversold on Google because of Meta and also Snap. You saw Snap sell off about 30 to 35% based on earnings on Thursday. I don't think you want to go short on Google at these levels. Okay, certainly I think if a dip down here to about the 105 level on Monday or Tuesday, if I see some type of sell-off, I think I will be a buyer for Google going into earnings on Tuesday. All right, Microsoft, I'm not really going to touch. Obviously, it's worth watching this consolidation channel that's been happening for quite some time now, and this is starting to look like a potential breakout candidate with Google here. So let me just go ahead and draw this here. All right, so it looks like on the daily a gigantic bear flag, but we saw how Tesla broke out of that bear flag, right? It might actually come back down to retest that trend line. I'll talk about Tesla in a second, but it's starting to it almost broke out of this trend, okay, on Friday before the sell-off. So the tech is just, it's going to stay a little bit mute, I think, on Monday and Tuesday, but wait for the earnings. So both Microsoft and Google, I'm actually pretty bullish about. So, all right, what am I bearish about? I will be bearish about Meta. Okay, Meta does have a gap. It created a gap because of Snap. Interestingly enough, the market likes to follow Snap, which doesn't make a whole lot of sense, but the market doesn't either sometimes. So 154 support. Look at what's going on here. Okay, we are nearing the lows back to COVID. All right, if you remember COVID, Meta or Facebook at the time reached about $136. Okay, 135, let's say, during that COVID low, and it just looks like it's coming back to that COVID low. They obviously are stop hiring, which is, I mean, bullish for their financials, but that's Q3 and Q2. They had they've cut their estimates too. Now, the only thing I will say about these big tech earnings is that, hey, good enough earnings seem to push the stock price up. I mean, if you want an example, look at what Netflix did, right? Netflix, okay, and now I think Netflix is going to pull back down now that the little rally is over. I don't think this gap's going to get filled anytime soon. But Netflix reported nearly 1 million lost subscribers, the largest in their history, okay? You thought 250 lost subscribers was bad enough. They lost 1 million this time. But remember, last quarter, when they came out with their earnings, they said they're expected to lose 2 million. So they actually did what? They lowered their expectations for the market and they beat it. Okay. But what's the reality? Okay. Netflix is losing 1 million subscribers a quarter and potentially even more. However, they said during this last quarterly filing that they were actually bullish and they were going to add 1 million subscribers this coming quarter. So we'll see. All right. So anyway, that's Meta. Let's talk about Tesla real quick, right? I mean, Tesla just broke out of this trend line, this gigantic daily bear flag, blew up, and just, I mean, but again, their earnings wasn't great. They sold Bitcoin, right? And we saw Bitcoin up. They sold Bitcoin just to beef up their cash. They took a loss on their Bitcoin earnings. But it's good enough. All right. So that's the market that we're in. It's just a good enough market. People step in, buyers step in. All right. But now you got this gap, all right, down to, oh, good Lord, right about the $750 level. Got rejected at this candlestick back here on May 9th. Now, of course, anything can happen with Tesla, right? It's super volatile. It can run up on good news with tech and all that. So I'm not going to touch really Tesla this coming week, but let's go ahead and take a look at our final ticker, which will be AAPO, Apple. This is the largest rising wedge I have ever seen. They better beat, or it's going to take the whole market down with them. So we'll see what their numbers look like on Thursday. I might not play Apple. I rather play actually Amazon. Because Apple is just one of those things, right? It's just, they can dump on earnings, but then it might come back up because there's dip buyers. I don't see a big move happening with Apple unless they have a really good beat. Okay. If they really just knocked it out of the park, which I kind of skeptical about, we'll see. But Apple, I'll kind of stay away from because I don't really like the price action on earnings, but I do like the price action on Amazon. All right. Amazon, pretty good, a decent looking run here. All right. We're starting to top out at the 120s levels here. You have a 127, 120, yeah, about 127 resistance, which is the EMA 100 on the daily. All right. So it's starting to catch up to that. So I'm actually looking for a call on Monday to pick up before earnings on Thursday, because you have a large gap that needs to get filled here all the way to the 140 levels. Imagine if they actually beat earnings, beat by heavy expectations. Now the market is already very, very bearish on Amazon already. So I'm going to go ahead and take my chances, and I'll probably do a 130 call and see how the earnings are looking like. Remember that we're near the COVID lows again. If Amazon fails, then yeah, we're back to the COVID lows, which is under $100, $88. But I think Amazon is just they just had their Prime Day. I understand that'll be Q3. They don't have to account for Rivian losses anymore. I think there's plenty of good reasons to be bullish on the least short term for Amazon going into the following week. Okay, so with that being said, I'm done for the weekend. I hope you enjoyed this video. I hope you enjoyed the insight. If you're looking for daily content, you're looking for daily market updates, if you're looking for community to trade with, if you're looking for trade signals, I suggest you go to therockTrading.com, and there's plenty of reasons to, I believe, and you can see some of our history here. We're running a special. It's $59 a month, and I don't think you can beat that anywhere else with any other trading groups out there. But you know what? Every time somebody signs up, I donate $100. That's more than $59. Obviously, I donate $100 to local charities. So, with that being said, I hope you guys have a great weekend, and I will see you guys all